African nations are searching for ways to close a massive financing gap, and blue and green bonds are emerging as a potential path forward. Bloomberg Africa senior reporter Yinka Ibukun joins us from Accra. Yinka, we've already seen some test cases of this.
Benin took a pioneering step of actually issuing an SDG bond, a Sustainable Development Goal bond, in 2021. And it was a 500 million euro bond, and about a sixth of the proceeds for that bond were to be spent on the expansion of access of clean water in Benin. That was quite unusual because that's usually something that you wouldn't go to commercial lenders for, but it was twice oversubscribed, which shows that there was an appetite at the time for the kind of debt that has an impact. And so that was a really impressive move from Benin, which from anecdotal reports has had an impact on the ground. But that's also something that's not actually accessible to countries that don't have investment grade credit ratings. And today, the reality is that most countries in Africa do not have investment grade ratings, which means that they're essentially not able to issue that sort of debt.
But, you know, Yinka, we did hear about a water utility that was in Tanzania and actually managed to finance their own water project without borrowing in dollars, which, again, just speaking to what you're talking about, lending and commercial lenders could be significant for some of these projects on the ground. Why do you think that's important?
That was the Tanga Wasa 10-year green bond that was issued by a utility in Tanzania. And that was interesting because it was issued in local currency, which basically protects the investors from and also the Tanga Uwasa from currency risk. What happens is that if you borrow in euros or dollars, if your currency depreciates, then your debt automatically gets more expensive. A lot of African currencies have been depreciating, and so that's quite an issue when you need to repay the debt. And so it was very interesting that this green bond, which was the first in East Africa, was able to happen and was used to expand again access using a commercial case that investors bought into.
For those countries and communities, Yinka, though, that badly need water infrastructure repayments or repairments, they're sometimes the least attractive to private investors in various cases, as you outlined just there. Who are we seeing then stepping in to finance some of these projects if some of these communities can, in fact, get a bond?
Non-commercial sources of funding have reduced. I mean, since if we look at Benin in 2021 or even Tanzania, since those issuances happened, aid has significantly reduced when you look at countries like the US and some European countries. So that would have been a key source of financing for the sort of projects that actually help provide more access to water. And then in addition to that, social spending in a lot of African economies has reduced because they've had to keep up with debt servicing payments. In many countries, debt servicing payments exceed what countries pay on health. And so the issue is that bonds still remain a commercial solution that is only interesting to private investors if there is a gain. And also, in addition to that, countries or entities looking to do that need to have the institutional capacity to structure a bond. Unfortunately, as it stands today, it's still an exception rather than a rule in many parts of the continent.